If you thought that companies being purchased for billions of dollars was a thing of the past, you were sorely mistaken. Another big one bites the dust, and this time it's EA, who sold to PIF, Silver Lake, and Affinity Partners for $55 billion. Now, I'm not going to bore you with all of the details in the press release, but there's definitely some stuff of note here, namely the fact that a lot of people are calling this a leveraged buyout. Let's talk about what that means for EA. It's not necessarily a good thing. And let's talk about some of these highlighted quotes I have here. This is an all-cash transaction that values EA at an enterprise value of approximately $55 billion. EA stockholders will receive $210 in cash. And they said that we are honored to invest and partner with Andrew, an extraordinary CEO who has doubled revenue, nearly tripled EBITDA, and driven a five-fold increase in market cap during his tenure, said Egon Durbin, co-CEO and managing partner of Silver Lake. The future for EA is bright. We are going to invest heavily to grow the business, and we are excited to support Andrew and the EA team as the company accelerates innovation, expands its reach worldwide, and continues to deliver incredible experiences to players and fans across generations. This transaction was approved by EA's board of directors. It is expected to close financial year 27 Q1. The transaction will be funded by a combination of cash, each of PIF, Silver Lake, and Affinity Partners will provide, as well as rollover of PIF's existing stake in EA. There was already a stake from PIF in the company, constituting an equity investment of approximately $36 billion and $20 billion of debt, financing fully and solely committed by JP Morgan Chase Bank, $18 billion of which is expected to be funded at close in 2027. Each of PIF, Silver Lake, and Affinity Partners plan to fund the equity component of the financing entirely from capital under their respective control. Upon completion of the transaction, EA will remain headquartered in Redwood City, California, and continue to be led by Andrew Wilson as CEO. Now, a lot of people are concerned about this for a few reasons. Namely, with Saudi Arabia, I said, why do people dislike Saudi Arabia buying game companies? Just to see why people were talking about this. The AI overview of Google, which I know a lot of people also don't like. Anyway, it said, people dislike Saudi Arabia's purchase of gaming companies primarily due to the company's well-documented human rights abuses, which critics argue are an attempt at sports washing or game washing to improve their global image. Concerns also exist about potential future government interference in game development and a loss of creative freedom for developers working for companies now owned by Saudi interests. Well, we do have a bit of a model for what happened when a certain company was acquired by a Saudi Arabia company. And that was with Embracer Group. You might remember Embracer Group had some investments from Saudi Arabia, namely the Savvy Games Group. This is a group that invested in the company. It's based in Saudi Arabia. The company was founded by Public Investment Fund of Saudi Arabia, a sovereign wealth fund to foster the growth of the games industry. And if we actually look at what happened with Embracer, as you probably know what I'm getting to, there was debt and restructuring in 2022. To present, Savvy Gaming Group, according to Wikipedia, a company wholly owned by Saudi Arabia's Public Investment Fund, invested about $1 billion into Embracer Group in June of 22. So that happened in 2022, but in 2023, the company announced that a $2 billion investment deal fell through in October of 2022. So when that failed to materialize, basically things were not going super great over at Embracer. So a lot of people have concerns for the reasons I outlined above. Personally, I don't really know what to think about the whole business being purchased. This is EA. This is one of the mega companies. And when I was thinking about it today, I basically just said that the industry as we knew it just doesn't exist anymore. It's not the way it used to be, and it hasn't been for a long time. Blizzard bought by Activision, Activision bought by Xbox, Bungie bought by PlayStation, Ubisoft bought, well, sort of folded in with Tencent. EA was bought by PIF, aka Saudi Arabia. The industry we knew is gone, y'all. This is the new era of gaming. Whole new owners. You're talking about mega companies merging with other mega companies. This is something that I sort of thought would happen. You know, when the whole Activision thing went through, I thought we were at a reset point, and we are living through it right now. We are watching the entire games industry sort of reset to some new reality, whatever that ends up looking like. Now, EA, you remember back earlier this year, this is from April 29, 2025, they cut 200 jobs in service of driving future growth, bringing total job losses to around 3,000. I believe there were more layoffs in May. So it's not like they were doing great. And if you are curious about PIF, who are they? You know, there's Prince Mohammed bin Salman. I'm not even going to try and say this name. Prince Mohammed, we'll just say. It's a very long name, and I don't want to butcher it any more than I already have. And all of these people run the company. A lot of people have pointed out that Silver Lake is also one of the companies being purchased here, and you can see these are all the main people over at Silver Lake. And then there's also Affinity Partners, which is owned by Jared Kushner. Corey Kushner is an American businessman and investor. He is a son-in-law of the President of the United States, Donald Trump, through his marriage to Ivanka Trump, and served as senior advisor in his father-in-law's first administration from 2017 to 2021. He was also the director of the Office of American Innovation. So a lot of familiar faces, especially if you live in America. You probably recognize Jared Kushner. But no, this isn't an entirely through and through Saudi deal like a lot of people have been talking about. There are American interests also investing. Now, what I have found particularly interesting was the idea of a leveraged buyout. So I was like, what does that mean? A leveraged buyout is the acquisition of another company using a significant amount of borrowed money debt to finance the purchase rather than using the buyer's own capital. How it works: you buy the company, collateral. The assets of the acquired company are often used as collateral to secure the debt, placing the financial burden on the target itself. Repayment: the acquired company's future profits and cash flows are then used to pay off the debt. Exit: the goal is for the private equity firm to exit the investment by selling the improved company, ideally generating a high return on their initial equity investment. Obviously, that is an AI synopsis. I don't know a lot. This is like super high level business stuff. You're talking about billions and billions of dollars. I don't really know if that's accurate. Maybe somebody in the comments could sign off on it. But obviously, with everything that happened with Embracer, with everything that has happened earlier this year at EA, a lot of people have expressed concerns. Here's what Jason Schreier said about the matter. It's official: EA is going private. The leveraged buyout will be financed by a staggering $20 billion of debt, which likely means some aggressive cost cutting is ahead for EA in the coming months and years. A lot of people are understandably focused on the Saudi Arabia and Kushner parts of this, but the far bigger immediate impact will come from the new private EA being on the hook for $20 billion in debt. That could mean mass layoffs, more aggressive monetization, and other big cost-cutting measures. As you may know, the FIFA games come from EA, so there's already a ton of money being spent there on the FIFA games, and obviously that's going to continue. And he also pointed out that I think people are missing is that Saudi Arabia already owns 10% of Electronic Arts. It's the company's third largest institutional shareholder. So already they had a lot of money invested into this company. And he also elaborated on the leveraged buyout thing. Sean asked, 18 billion of which is expected to be funded at close. So that's in reality only 2 billion of debt the company will keep, and it'll be mostly 36 billion financed by cash. They're also including PIF's existing stock holdings in that deal. Jason points out, no, that means the bank is paying 18 billion to the borrowers at the close of the deal, and 2 billion later. The debt is 20 billion. Jason is correct. We read the press release. Think about it this way. If you buy a house with a mortgage, the loan is funded at close, meaning the sellers get the full amount from the bank as soon as you sign the paperwork. And you owe the debt for however many years it takes, like a 30-year loan or a 15-year loan, whatever you end up taking. Now, if you were curious how the employees are feeling about this, well, they're pretty dang nervous. They obviously follow the industry. There's already been layoffs at EA. There were layoffs that hit BioWare, for example, who has come up multiple times as one of the companies a lot of people are concerned about. Mass Effect, as I'm a huge fan of Mass Effect, I was looking forward to the new game. Here's what Stephen Totilo talked about. He actually reached out to a few people. Let's find a few of the quotes. This is one of the largest and most significant investments ever made in the entertainment industry. EA CEO Andrew Wilson told employees in a message that was distributed shortly after the deal was announced, "Our new partners bring deep experience across sports, gaming, and entertainment," Wilson wrote. "They are committed with conviction to EA. They believe in our people, our leadership, and the long-term vision we are now building together." So he goes on to do a lot of what I just did, breaking down the details about what other investments these places have, but I'm curious about the human impact. I am a little bit curious about how people are going to react to this. In 2022, Savvy CEO Brian Ward told me that, "I'm not over there on an image makeover project." Ward said workers in town halls for the esports group Savvy had purchased grilled Ward and others about the LGBTQ rights and women's safety in Saudi Arabia. Ward told me in 2022 that he responded to such questions by saying Savvy would operate with the values and culture of what we know our audience wants and our audience respects, and what those of us who have been in the business 25 years like about our industry being forward-looking and liberal in many respects. In subsequent years, I did not hear of censorship at Saudi-owned studios, but in July, Reader Grab reported that an Amazon Prime docuseries about the Esports World Cup omitted LGBTQ subject matter from the Saudi version of one of its episodes. In his note to workers, Wilson said today that our values and our commitment to players and fans around the world remain unchanged. That didn't convince one current EA worker who told GameFile that Andrew Wilson basically said F you to all women and LGBTQ employees at EA with this deal. Speaking anonymously because they were not authorized to discuss company matters publicly, they also said it just shows how many people have been collateral this past year for executives to make out rich. Nothing feels great, and we know when the deal closes, it's going to get worse before it gets better, if better is even possible," said another. "I'm nervous about what this means in terms of workforce once the deal is closed, as layoffs usually follow those types of acquisitions." And on a personal level, the second person added, "Those future owners are really not in line with my values and beliefs." So obviously a bit of nervousness from employees and people who are concerned about the future of the company. And internet reactions included this one from Synth Potato. I followed this guy for years. "This EA buyout might be a disaster, not gonna lie. It's probably gonna be really bad for the employees, I think." "Well, there goes EA," said another. "Did a quick video on YouTube saying this could be a massive opportunity for EA games to get the love they deserve with more backing behind creativity, content improvements, etc. The other option was a chop chop." Well, we get the chop chop. Absolutely, you will. According to a new report from Financial Times, EA's new owners will rely on AI as a way to reduce production costs and increase EA's profits in the coming years, with the stated goal of absorbing the colossal $20 billion debt associated with the acquisition. Bloomberg's reporter Jason Schreier claims the debt could mean mass layoffs, more aggressive monetization, and other big cost-cutting measures. Yeah, so, I mean, we saw what happened with Microsoft Activision. Obviously, there were a bunch of layoffs, and that was at a time, that acquisition happened at a time when everybody thought that the industry was going straight up. And what happened was it didn't go down per se. It just sort of leveled off. And that is not good for investors. They want line to go up. If line doesn't go up, people's jobs go bye-bye. That's just how it goes. Your line has to go up. And in a way, it sort of makes sense. I mean, you need to be making profit. You need to be profitable in order for a business to run sustainably. But this is just really, really unfortunate because EA has made some pretty good games over the years. And now we're left. I think everybody's just sort of left wondering what is going to happen from here. Time's going to tell. Anyway, thanks for watching, everybody. Hit that subscribe button, hit that bell to know when my content goes live. Thank you so much for watching, everybody. Thank you so much to the members, Chris Reddy, Phil Aries EMS. I do greatly appreciate you. I appreciate everybody who supports on the membership tiers. Thank you so much. I'm going to get out of here and go to bed. I'll see you for the next one. Bye for now, everybody.